Hey everyone, welcome back to Corporate Decoder, the place where we decode corporate filings so you don't have to. Today we're diving into Elevance Health's latest proxy statement. You know, those documents that companies send out before their big shareholder meetings. This one's got everything. Director elections, executive pay, even a shareholder proposal that's a bit like asking your boss for a performance review of their diversity program. Sounds spicy. Let's get into it. Elevance Health, formerly known as Anthem, is one of the biggest healthcare companies in the US. They serve about 112 million people through health insurance plans like Blue Cross and Blue Shield, and also offer services like pharmacy benefits and healthcare management. Basically, they're in the business of keeping people healthy and managing their healthcare costs. So what's this proxy statement all about? It's a document that Elevance sends to its shareholders before the annual meeting, which this year is on May 14th. It lets shareholders know what's on the agenda and gives them a chance to vote on important issues, even if they can't attend the meeting in person. Think of it as your chance to have a say in how the company is run. There are four main things shareholders will be voting on. First, they'll be electing 3 directors to the board. Second, they'll have an advisory vote on executive compensation, a chance to say whether they think the top bosses are getting paid fairly. Third, they'll be voting to ratify Ernst & Young as the company's auditors for next year. Finally, there's a shareholder proposal asking for a report on the effectiveness of the company's diversity, equity, and inclusion efforts. Let's look at who's up for election to the board. We've got Susan DeVore, who brings CEO and healthcare industry experience. Then there's Bahaja Jalal, with a ton of expertise in biopharmaceuticals. And finally, Ryan Schneider, who has a background in real estate and finance. The board recommends voting for all 3 of them. It's interesting to see what skills the board values. They want people with CEO experience, executive leadership skills, and knowledge of the insurance and healthcare industries. They also want directors with financial expertise, tech savvy, and an understanding of regulatory and public policy issues. Diversity is a factor too. They want leaders who represent the breadth of the communities that they serve. Now let's talk about the big bucks, executive compensation. Shareholders get an advisory vote on whether they approve of how the top executives are paid. It's a non-binding vote, but the company does pay attention to what shareholders think. Elevance says its executive compensation program is designed to attract, engage, motivate, and retain talented executives and reward them for contributing to the company's success. They try to align the executives' interests with those of the shareholders, so everyone's working toward the same goals. They also consider factors like market conditions and internal equity to make sure pay is fair. The company has some pretty standard compensation practices. They use a mix of fixed and variable pay with a heavy emphasis on performance-based compensation, and they have stock ownership requirements for executives to make sure they think like owners. On the flip side, there are some things they don't do. They don't backdate stock options, provide tax gross-ups for changing control situations, or allow executives to hedge their stock holdings. The CEO's target compensation is heavily weighted towards equity awards, like stock options and restricted stock units. About 78% of her pay is in equity, which encourages long-term growth. For the other top executives, equity makes up about 71% of their compensation. Interestingly, the committee decided not to increase the base salaries for any of the top executives in 2024. The CEO's salary remains at $1.6 million, and the other executive salaries stayed put as well. A big part of executive pay is tied to the company's performance through an annual incentive plan. The plan uses a balanced scorecard approach, taking into account things like adjusted net income, operating revenue, improving health of humanity, star ratings, and consumer effort. So how did Elevance do in 2024? Well, they missed the target for adjusted net income and star ratings, but they exceeded the target for operating revenue and improving the health of humanity. The company ended the year with a rank of 3rd out of the 6 companies in the peer modifier group for adjusted net income growth. When it came time to pay out the bonuses, the committee used something called an individual performance modifier. They boosted one executive's bonus because he was critical in improving the business from post-pandemic lows in the commercial division. Everyone else remained at the same percentage, which equaled to 35.7% of the original bonus plan. Alright, let's get to a spicy part of this filing. There is a shareholder wants Elevance to publish a report detailing the effectiveness of its diversity, equity, and inclusion programs. This report should include things like hiring, promotion, and retention rates, broken down by gender, race, and ethnicity. The board recommends voting against this proposal. They say they already provide enough information about workforce composition and practices, and that an additional report would be unnecessary and not an appropriate use of company resources. Let's see what policies they are enforcing at Elevance Health. They have a code of conduct that applies to everyone from directors to employees, with some of the waivers of the code needing to be approved by the board or by a board committee made up of independent directors. This is to ensure that ethics are in place with all of their employees. Who owns a big chunk of Elevance? Vanguard and BlackRock. As of December last year, the Vanguard Group and BlackRock Inc. each owns around 9% of the company's stock, which is mostly held with the power to manage or direct where the money is, or direct where the money is, or direct where the money is. Now let's talk about the auditors. For 2025, Elevance Health will recommend Ernst & Young LLP to continue doing the audit work. A few things the board is going to take into consideration is going to be all about looking into how competent and independent those auditors are, how good their communication skills are, as well as what the costs of the independent auditor are to Totases. Enter to be $1 million for audit-related fees and almost $500K for taxes. Finally, the moment you've been waiting for, the financial results. In 2024, the CEO Dale Boudreau took home a total compensation package worth $20,476. The other top executives also made millions, with total compensation ranging from $5.8 million to $6.9 million from 5.80. Stekika Boudreau actually had negative compensation. This is primarily due to how these numbers are calculated. When we look at the adjusted net income, that's where things start to normalize. 2024 saw a $7.677 billion in adjusted net income. Operating revenue for the year was $173,349 million, up from $170,200 million as the year before. That's good. It shows top line growth. So after diving into this filing, what do we make of Elevance Health? On the positive side, the company seems to be performing reasonably well in the current environment. There's a clear strategy in place to reward management for long-term goals. Plus, they're paying attention to what their shareholders are saying, at least when it comes to executive compensation. However, a couple of things give me pause. The mixed performance in 2024, where they exceeded revenue targets but missed on earnings, suggests there might be some cost management issues. What does it mean for them to reduce their financials but increase their non-financial performances? What does the trade-off look like? Also, the fact that the board recommends voting against the shareholder proposal on diversity might not sit well with some investors. It suggests that they're not fully embracing transparency on this issue. Overall, Elevance Health seems to be a company at a crossroads. They're navigating a complex healthcare landscape, and they need to balance growth with profitability while also keeping their stakeholders happy. It's a tough job, but someone's got to do it. Thanks for tuning in to Corporate Decoder. If you enjoyed this deep dive, don't forget to hit that like button, leave a comment, and subscribe for more insights into the world of corporate filings. Until next time.